Hi, welcome to AGS Insurance Group. I am here to talk a little bit about getting to know what to do as far as selling insurance and specifically transportation insurance. So selling commercial insurance is probably one of the most lucrative things you will do in your career. And it is extremely important to have knowledge into what you're selling and to be able to help your customer and guide them into the right insurance plan. There are a lot of insurance plans out there where may not be suited for the for your customer, and typically what happens if they don't have the right agent, they go and visit an agency like Allstate or Farmers, people that are used to dealing with mom and pop home insurance and regular car insurance. They may really not understand all the aspects of commercial insurance. So in order to understand all the aspects of commercial insurance, you have to understand that there's a big difference between writing personal auto and writing commercial or writing home. And we are here to basically guide our customers into working with us and providing them the guidance in terms of making sure that they have the right coverages. Anybody could give a quote, anybody could provide an insurance quote that's the cheapest, but that's really not what we're here to do. We're here to provide the correct insurance quote to make sure that they have the correct insurance. If, for example, most customers, they will have insurance for their commercial vehicles, and they may not even know the differences between the various insurances that exist. So it's important to understand that whenever you're insuring the commercial vehicle, you first have to know what is the use. Is the use for him to get to work, as in the case of, let's say, an electrician or a plumber, they use the commercial vehicle to get to work and to store their tools. That would require different policies than a trucker that uses his vehicle to perform work for others. Trucker tends to be on the road a lot more than an electrician, so it would be different premiums, different base of liability. So it is important to understand the first and foremost, when you get a commercial account, what business are they in? Then the next most important thing is to understand who is the insurance company, or which insurance company out there is best suited to write that class of business. When doing commercial trucking, the insurance companies that are really doing trucking specifically are Progressive, American Millennium, and then about a handful of others that are in this space. So you pretty much have about 5 or 6 companies to deal with. However, not all of them will do New Jersey, and not all of them will do trucking companies that are new entities. So a lot of times one of the requirements to doing a new entity or to doing commercial insurance is that the trucking entity must be in business for 3 years. The only company out there that will write new truckers is Progressive. There's nobody else. There's no other company that will write a trucking company that has not been in business for at least 3 years. So whenever you have a client that is just starting in business, just getting started, the only insurance company available for them is Progressive or the New Jersey insurance plan. What is the New Jersey insurance plan? It is the plan as of last resort that we would go to write coverage when no insurance company in New Jersey would write the coverage. So that's pretty much in a nutshell describes what our market looks like for trucking insurance. That makes it a little bit more challenging. As far as the insurances that the trucker needs, whenever there's any trucking operation, any commercial vehicle, they specifically, let's talk only about trucking because that's very unique. They're transporting somebody else's goods. So they will need cargo insurance for the goods that they're transporting in case something happens to the goods, whether it would be an accident on the road and the goods are all over the highway, or it is fire, theft, any problem with the goods are covered by cargo insurance. Very easy to understand. The other insurance that they're going to need is for their vehicle. So again, whether the vehicle is financed, if it's financed, it's absolutely required to have physical damage by the bank. If it's not financed, I still urge all customers to get physical damage insurance. And that will cover the vehicle in case something happens, accident. So there's something called comprehensive and something called collision. So comprehensive will cover any loss, and collision will cover in the event of an accident. So that is all called physical damage. So there's two types of insurance, cargo and physical damage, that we went over. Every single trucking operator must have these two coverages for each one of their trucks. Now, if they are also running their own trucking company, in other words, they're not subcontracted to somebody else, they will need something called trucking liability. Trucking liability, auto liability, is one of the most expensive coverages to get because typically it is $1 million policy, and the typical insurance just for the auto liability, again, depending on the truck, for let's say a box truck, it could be $7,000, $8,000. For a tractor trailer, it could be $20,000, could be $30,000, just for the trucker liability. And the rate of the liability depends on the driving record from the drivers that the owner has on the policy, and a lot of times from the credit history of the owner, because the insurance company will run the credit history to make sure that they're not going to have any problems collecting from the insured. So let's go over the insurances again. You need cargo, you need physical damage, and if you're running your own company, you're going to need auto liability, commercial auto liability, trucking liability. If you are not running your own company and you're working for someone, they may require you to get something called non-trucking liability insurance. Non-trucking liability insurance is of basically, if you're using the truck, kind of like your personal car. You've come to the company to do the work, but they don't have any work for you at the moment. You take the truck and you decide to drive it to the nearest Wawa to get a cup of coffee, and on the way you get into a car accident or truck accident, whatever have you, you hit another car. Well, would the insurance from the company you're working for be responsible for you using your truck as a personal vehicle to go get a cup of coffee? The answer is probably not. So most companies will require you to get something called non-trucking liability insurance, which typically is the least expensive insurance. It's about $700. Again, depending on the driving history, it's about $700 on the average. And that will cover the instances when you're driving your truck as a personal vehicle. When you're not hauling any freight, you're simply driving it as a personal vehicle. Another insurance that you're going to need is your general liability insurance. You're running a business, you're running your own company, you need general liability insurance in case your company gets sued. Somebody comes in to visit your truck, someone's looking around your truck, they slip and fall, bang their head on their truck, and they have to be rushed to the hospital. That would be covered under your general liability insurance. So you must have general liability insurance as a trucker, and most companies you work for will require that you have that. Another insurance that's required by law is your workers' compensation insurance. Any entity operating in the state of New Jersey will need workers' compensation insurance. So in procuring your liability insurance and your cargo insurance and your physical damage insurance and your general liability insurance, it is very important to understand that you will also need your workers' comp insurance. And workers' comp is based on the salaries that you're paying to your drivers. So in doing all these insurances, a lot of times the customer may not understand the various distinction, and they may think, well, I'm just doing insurance. I'm going to write a check for insurance. I'm going to write a check to Progressive for insurance. My insurance is $36,000 or $28,000. They don't understand that 28,000 is made up of, say, 5,000 physical damage, 1,000 cargo, 12,000 trucking liability, $700 non-trucking liability, $1,200 for general liability. So they don't understand that all these amounts added together is what makes up the total policy. The other thing to really be aware of is that Progressive specifically assigns a high value to collecting money. And so a policy may say $26,000, but if you pay today, you only have to pay $23,000. So the paid in full premium is significantly lower than the full premium if you're going to finance it. And also they're offering various financing terms depending on your credit history as an insured. I hope this has been helpful. It's very important to understand these basic rules in representing and writing trucking insurance. And obviously there's many more facets to this, depending on the size of the fleet, depending on the customer base, and so on, and the type of freight. So let's talk a little bit about the type of freight hauled, and let's talk a little bit about what kind of trucks exist on the road. So you have your general tractor trailers, the 18-wheelers. You have dry van, which is the most popular thing to do business with in trucking is the dry van. After that, you have something called a reefer, a refrigerated trailer. A refrigerated trailer is insured the same way as a dry van, but it will also need refrigeration breakdown insurance, which most food or refrigerated customers would require you to have as a trucker. The next most popular trailer is called a flatbed, and that is the equipment that you would use to transport bulkier items, construction goods. Then from that point, I think the next popular would be a dump truck. Dump truck tends to be one of the favorite items to insure for Progressive because they're relatively simple to do. They pretty much don't need cargo insurance. They do need the trucking liability insurance. They do need physical damage, and those are and the general liability, and those really are the three insurances that they need. I would also urge every single customer that's insuring their business to also get the cargo insurance, because in the event that the truck spills all over the road, it flips, very unlikely event that happens, but which insurances will be in effect? So the physical damage insurance will be responsible for getting the truck back on the road. Your liability insurance will be responsible for whatever damage to the road or to other vehicles, or a little bit of the cleanup as well. But you're still going to owe money to the quarry or wherever you got your stone or sand or whatever else you are hauling. You're going to have to pay that to the company. So I think it's important to have coverage. But let's say the sand or the gravel is not that expensive, but it is spilled all over the road, and someone has to come in and pick it up, and there's significant expense in terms of cleanup. So again, while cleanup may be covered under the liability coverage, it is also important to have some cargo coverage as well. I would urge everyone to get cargo coverage. So that's where it is. What else can I tell you? Definitely on the refrigerated cargo, you absolutely must have cargo coverage. You're hauling lettuce, or you're holding meat, or you're holding berries, if that refrigeration breaks down, or you have an accident where it's all over the road, it's going to be pretty expensive to clean it up, and you must have cargo coverage. Cargo coverage will cover you only if the cargo is not yours and someone is paying you to transport it. Cargo coverage does not cover you if the cargo is yours. That would require a different kind of insurance policy. A lot of this information is available online in insurance certification classes and so on, but I don't think it's as specialized. I think the rest of the information available talks in generality about what is needed. It doesn't really address the specifics. So I hope this has been helpful.